Mark Selby, back for our weekly catch-up. How are you?
Good to see you, sir. I'm excellent.
Yeah?
Made it back to another big number in the nickel market. The nickel price touched $16,000 this week. It's like, woohoo.
That's a big moment. That's a really big moment, isn't it?
Yeah, no. I mean, we've kind of, again, last September when we started talking about Canada nickel and the price was up 17 or 18,000, I said, we're going to get down to 12 or 13. I did not think we would be back to something that started with a 16 this soon, particularly because in between this COVID thing showed up. But it's just, again, this in terms of the strength of demand really sort of pulling the entire market up. So, which is great to see.
Well, it's fantastic. And I see like even coppers and zinc are sort of sneaking up as well, following suit.
Well, that's the thing. I mean, 2 weeks ago, right, we talked about, towards the end of the Chinese holiday week, nickel did this little pop-up. And it was suspiciously like people trying to position themselves in front of everyone else coming back from work, which is what happened. We saw nickel. Nickel sort of had a nice run all the way up, I think from $660 a pound up. And then this week, basically copper, zinc, and the rest of the metals have joined the party. So, it's now you've got, again, the momentum money coming back in. It's not because people think, Chinese demand is going to be, materially higher. It's just, that strength that we saw is continuing. The buyers are coming, continuing to buy metal in all forms because, they need it at this point in time. And then the other part is, a lot of metals with various COVID things are, seeing supply issues. So, when you're seeing this, strong burst of demand growth or not, continued demand growth that we saw earlier with still some supply concerns, then, all the metrics, premiums, TC terms, prices are all headed in the right direction. And you're starting to see that momentum money pile in across the complex. Copper's up over $3.10 a pound, zinc's up over $1.10 a pound. So, it's going to be an interesting couple of months here.
So obviously the market's moved with the Chinese New Year component. So, but are you expecting, or what normally happens around Christmas? Everything kind of goes quiet there. Do you see a little reset typically?
No, I mean in terms of China, the slower periods are one sort of this October big week off, and then Chinese New Year where again you have 2 weeks off. So, for China, it's those periods that are sort of this a little bit slower ones. And then there's a week in May as well, as opposed to Christmas time. November, December in China is generally, pretty good seasonally. Through the summertime, southern China gets pretty hot. So that sometimes, impacts the amount of industrial production in certain areas. Now, the big thing is in China now is with air pollution. So the government is putting restrictions on the output of certain industries. So to minimize air pollution during the wintertime, that will have impact on some spaces. But right now, from a nickel perspective, we're not expecting anything major from those environmental cutbacks.
God, it really does tell you how important China is in relation to Europe or North America, because those places are usually quiet around that time.
Yeah.
Most things stop happening. A lot of no buying.
Yeah.
So China really is driving this.
Oh, big time. I mean, again, China went from a small amount to half, but now really, you're looking at, in some cases, almost 2/3 of metals demand,
wow.
Right now with the rest of the world in a bit of a COVID downturn. So, we are really on the Chinese calendar point.
Right. Okay. So let's talk about something we talked about last week, Jinchuan. We know more. Your spies have been at work.
Yes. So last week I speculated whether it was a real maintenance shutdown or not, but there's a processing step called converting where they're having an issue with one of those steps. And so, you're going to see production down from Jinchuan, which is the major pure nickel producer within China, not the nickel pig iron, but the 99.9% nickel. And so, they're going to have a material impact on production. This past month, they will again this current month and potentially into November. What's interesting, and again, this is a good thing to watch, for consumers if you want to get serious in the space is, okay, if they shut down and if there's a supply disruption, do you see a change in the premiums for that product? Because that's a good sign as to, okay, was there sort of more than enough nickel floating around anyways, and it starts to come out? because you'll see always a little pop on the news, but is that pop sustained? And what we've seen over the last 2 weeks here is a pretty sustained increase in premiums for Jinchuan, material within China and pure nickel in general. So again, that's supportive of the Chinese are still buying and underlying demand still relatively strong. And again, the numbers we talked about last week with 20% plus year-over-year numbers in stainless nickel, the 300 series stainless steel is just huge numbers.
So that's good news. So we're talking about sustained pricing going forward. So
yeah,
we should be pleased, right?
Yes. Oh, good. Yeah, for sure. And then this is a nice setup in terms of again, this October to February period is the Philippines wet season, and so we've talked multiple times about that triangle of Chinese demand, ore supply and nickel pig iron production from Indonesia. And again, all things are pointing in the right direction at this point. We will see more NPI out of China, not out of China, out of Indonesia coming down the pipe here. But obviously, we're seeing NPI prices maintained, ore prices continue to move higher. It'd be nice if stainless prices were moving higher. That's why I don't think there's a massive amount of upside from here. But I think where that triangle is sitting right now is our downside risk is relatively limited at this point in time. Okay,
that's it. We always have to talk about the triangle, so that's good. That's the weekly update on the triangle.
Yeah.
I want to talk about nickel mines though, because it's becoming quite important to understand where this nickel is going to come from. Because we have lots of conversations, people talking about, we've got nickel this, we've got nickel that, and we know most of those are not going to get into production. Okay, so I want to talk about who's producing, where nickel's coming from going forward. So 3 companies I want to talk to you about. You're going to like one of them. So you've got Weda Bay.
Yeah.
Weda Bay, not quite sure how to pronounce it.
Mm-hmm.
We've got Norilsk. Okay, and we've got this tiny little company called Canada Nickel that we're going to give some airtime to. Okay,
sure.
You happy about that?
Yep. That sounds like a good plan.
I saw the press releases this morning, and this is why they're on here, because it pretty impressive, and I want to talk to you about it. Okay, so let's talk about Weda Bay first. So why don't you tell people what it is and what's happening there?
Sure. Yeah, and this is a good segue in terms of that Indonesian NPI part of the triangle is so. Nickel Mines did a joint venture with Jinchuan to basically purchase some of their production lines from their Indonesian operation. They have this massive plant in Morowali, which alone is that plant alone is the largest nickel producer in the world and the largest one of the largest stainless steel producers in the world. What's interesting about this, Nickel Mines has full financial exposure to it, but it's all operated by Jinchuan. So again, there's very few investable nickel pure plays. Nickel Mines gives you exposure to Jinchuan's production capacity, and again, it was a nice vehicle for Jinchuan to basically give a public market view on the value of their asset without having to disclose everything that's going on. They're still a private company. The announcement this week was Jinchuan has a joint venture with Eramet in a location called Weda Bay, and they're basically building out a similar scale, which will become a very, very large NPI plant and hopefully a HPAL plant at some point in the future. So Nickel Mines did a deal where they're buying 4 lines from this Weda Bay operation that's in construction, which was the additional NPI production I was alluding to. So that'll double for Nickel Mines, that effectively doubles their production capacity to over 50,000 tons of nickel per year, which starts to make them, in terms of nickel production, one of the top 10 producers.
This makes it really interesting because when you've got these big producers with big cash balances, with big balance sheets, with the ability to turn the volume up or down depending on what the price is doing. We've seen this in other commodities where, like lithium, for instance, where the big players can just ruin it for anyone like hoping to step into the market. Okay, and we're going to talk about Canada Nickel in a second here. So, how much strength do these guys have to be able to influence the amount of production coming down the line and how people get into the market and how they get financed?
Let's talk. Actually, that's a good point. So, in terms of Indonesia, again, some people look at what's going on at Jinchuan's plants and Weda Bay and say, oh, they will produce everything that the market could ever possibly need. We don't need any other nickel projects. And so, because they're talking about very large volumes. They're talking about hundreds of thousands of tons of new nickel capacity. Again, nickel, our view is we need 2.5 million tons more nickel from 2018 to 2030. The Tesla presentation, if you do the math on their 3 terawatts of batteries, it's 1 million to 1.5 million tons of nickel per year just for Tesla by 2030. And other people will be making electric cars at that time. So when you then come back to Indonesia and say, okay, yeah, that's 500,000 tons, 800,000 tons of NPI, great. We need all of that and more, because Indonesia right now is one of the only places where you can actually have a significant amount of nickel come to the market this decade. I think the contrast to it, and to sort of really explain some of the challenges there in why Elon Musk had to go on his miners please make more nickel little talk on his conference call last quarter. Norilsk is the biggest sulfide producer in the world. They just had their quarterly production announcements this week. On track for a good year, up about 7%. Where they were 4 or 5 years ago. If you go before China, you go back 20 years ago. You had Norilsk in Russia. You had Inco and Falconbridge in Sudbury. You had Western Mining in Western Australia. And then you had a few scattered plants. But those 4 companies alone, dominated nickel supply. And Norilsk on its own was 20% of global supply. Today, they're down about to 8% of supply. And, their production challenge, if you go to their investor presentation, they're going to be spending $3.5 billion over the next 3 or 4 years to, get rid of the several million tons of SO2 that they produce every year. So, they have a massive environmental footprint up there. The good thing is they're dealing with it, and, they want to bring it down by 95%. But that, when you're doing that in the remote high Arctic, that is not cheap, and it doesn't happen quickly. So they're spending a lot of money just to be able to, have the license to operate, to continue their existing production. The additional challenge in Norilsk face, why doesn't Tesla just go to them and say, hey, we'll give you $1 billion, please build a new nickel mine, is twofold. One is they've been mining nickel since the early 1960s. And their deposits they're mining are getting very, very deep. So just like I've talked before about Glencore, in Voisey's Bay, Glencore and Sudbury and Voisey's Bay, the deposits are now much deeper. And so, you got to build a hole in the ground, and that hole in the ground is limits how much you can, pull up. And, putting several thousand meter holes in the ground is also a very expensive venture. So, for them to do more high grade material is they're going about as fast as they can in terms of, and that's just going to keep their production flat. They have other low grade resources, but they have a challenge where they are the dominant producer of palladium globally and a large producer of platinum. And the issue for them is any of those low grade resources have much more palladium to nickel on a ratio basis than the high grade nickel deposits. So for them to produce any quantity of nickel is going to also create a huge amount of palladium. So, again, why aren't companies rushing to, increase supply by 50% or increase supply by 100%? It's because, the structure and nature of their deposits just really limit their ability to do that without spending a horrendous amount of capital.
So why would that be a bad thing? The fact that they're also discovering palladium. Wonderful. It's a nice, expensive byproduct. Why should we care?
Yeah, it's fine if you're, a couple percent of the market, and if you double or triple production, then, you'll have some amount. But when you are, I think the number is 30 or 40%, if not more, than the, global supply of palladium. And given the shift to EVs, will start to have a long-term impact on palladium consumption, doubling supply in that market when you're already 40% of it, and it's not particularly high growth going forward, is going to have a significant amount of impact on that market. So so they're in a bit of a box that way.
Yeah, they're sitting there. That you got some actuary type guys trying to do the math and go, does this make sense for us? And at the moment, it's a tight call, but one which they're not prepared to look at the moment. Okay.
Yeah.
Okay. But I'm interested in that. The Norilsk, especially Norilsk, haven't historically been concerned about ESG or such things. Why the big change for them? Is it again because they've got a good balance sheet. They don't need to report to anyone, do they?
Yeah, no. I think at the end of the day, they have shareholders, and again, I think they're trying to do the right thing. But again, given where those locations are, it's a huge footprint. So they have two main production centers. So one is in what used to be Finland. Inco actually built it in the 1920s, and then the border got moved, and that it ended up in Russia after the war. And so those are literally almost 100-year-old facilities. So they've been basically tearing them down, shifting some of the production, shipping raw material to a processing plant in Finland to get rid of some of that. And then in Norilsk, it's similar to Inco back in the 70s and 80s, where they just spewed out millions of tons of SO2 per year. And again, people pay attention, and a lot of investors pay attention to that. And Norilsk is publicly traded, so they're spending the money to fix this problem. And as I said, it's a very substantial sum of money to be able to get that problem fixed. But the good thing is they're doing it. So
yeah, it is good that they're doing it. But and I guess they've got access to cash. They've been at this a long time. But same question with Weda, is they've got the ability to kind of fix their own house, but they've also got to be looking out elsewhere and go, well, where next? Because as you say, not just drilling holes are expensive, but bringing the stuff up from the bottom of the hole is expensive. It's all just getting more and more expensive. They've got to look for new assets. Which brings us neatly on to no connection, but it was my version of the segue is the announcements that you made yesterday and today about what's going on at Canada Nickel. I thought it was worth a mention because of the sheer scale of this thing. So why don't you just remind us what you put out yesterday and today? Yeah.
So Crawford just keeps sort of getting bigger and better, and with the emphasis on better. So a big focus of our drilling program is to double the size of the higher grade core, which we did. So, that alone is 200 million tons at 0.34%. That's almost 700,000 tons contain nickel. Just that piece of it alone is bigger than most nickel resources out there by a substantial proportion. That's sitting in 2.5 million tons of other lower grade nickel resource. That once a plant's built, we'll be there to be able to supply that market. That's, in terms of, how the Teslas get their nickel, it's large, low grade deposits. That's where, again, I don't have to spend 3 years digging a hole to start mining. I have a big pit. And if I want to build it bigger at some point in time, I just expand my mill, buy more mining trucks, and away we go. Again, that's why the BHPs and the Rios of the world own all the big iron ore mines, all the big copper mines, is because you have that expansion optionality that you can continue to expand your operation without any real hard physical limits, that really impact, how quickly you can build your mine and be able to meet, future demand growth going forward. So, that's why, I think, Crawford's just ideally positioned, to be able to be one of those assets that can deliver the scale of the nickel that the Teslas and the VWs and all of the EV players are really looking for going forward.
And you've got to be able to say to them, we will definitely get into production. I know you've got your PEA coming up at the end of the year. You talked about a feasibility study by the end of next year, and you're fully financed through to the end of the PEA and some of the PFS. But tell me why we should believe that you're definitely going to be a producing mine one day.
Yeah, so our team's done it before with Dumont. We took it from a resource through to fully permitted construction ready project. Fortunately, it was during a market where nickel was not particularly in favor. We're changed 180 degrees now, and so and the key thing is here, those companies want to start talking to you at least once you've got a PEA, and more so when you've got a feasibility study coming down the pipe. So it's nice to be drilling and have a resource or thinking about getting a resource, but if you want to get into serious conversations with the EV chain, you need to be serious about demonstrating what the economics and what your project's actually going to look like. So real PEA done with a real engineering firm, Senko, and then hopefully a feasibility study in 14 months from now with the Senko. will allow us to, really engage with, the EV market. Where, again, my past life, I've got a lot of contacts in there who are keeping tabs on what we're doing. But, the real serious discussions start after you get, past the, PEA and on your way to your feasibilities.
Okay. So again, just quickly remind us, I know you're on a type, because of your news today, you've got a lot of phone calls which have come inbound. So remind me, so it's low grade, but that doesn't matter. Why?
Because at the end of the day, you're going to be, the advantage of these large low grade deposits. If you look at, copper deposits in Canada as a proxy, your operating cost is somewhere in the range of $7 to $10 US a ton. We'll show you what our numbers are in the PEA. But at the end of the day, you're going to be mining material that's hopefully $20 a ton, 25. Again, in our high grade core, hopefully $25 to $30 a ton. And in any business, when you have 65 to 75% operating margins, those are good, those are good businesses. And particularly, again, when you have a 2 million ton resource base, that you don't have to take all that cash flow and then go try and find some more that most smaller high grade deposits need to do. And again, once it's built, it's going to be in operation for 20 or 30 years. You've got the potential to expand it further. So, if you're a Tesla, if you're a Volkswagen, if you're a Japanese or Korean, supplier to those supply chains, and your business is going to grow 8x over the next 10 years. It'd be nice to have an asset that has the potential to expand along with you.
Right. So these are big projects, multi-decade projects, a big budget required, big capex required. Who's stumping up the money for that?
Yeah, it's going to come from three sources. You basically have the major mining companies, the BHP, Rio Tintos of the world, who want to have big assets, and particularly big clean assets. And we talked about the net zero potential for Crawford. The second piece is you've got your Japanese, Korean trading houses that are looking for supplying, key industrial parts of their economy. And so, again, that's another place where the financing package comes from. And then the third part, because of the EVs and the importance of nickel in the supply chain, it's actual participants in that industry who are looking for offtake, and providing financing support to get those projects going. So, it's a great spot to be in. And now that nickel is a favored metal, there's lots and lots of interest coming from the space.
Okay, Mark. Well, I appreciate you're on a tight schedule because you've got, and so it's a bit of a shorter one today, but I appreciate that. Lots of clues, lots of things we should be looking for as ever. You're pointing out the red flags and pointing out what the good bits look like. So we'll catch up with you next week for next week's nickel update. Congrats on this week. Some really impressive numbers there. We'll speak to you soon.
Sounds good, sir. Thanks.